Hey guys and girls, Nathan here from the Be Invested headquarters, and today I want to talk about the biggest wins in finance in May of 2020. Today I'm going to talk about 4 situations where we've been able to help out our investors on their debt plans and their debt strategy in order to build wealth through property investing, and how the finance is able to help them, get ahead and move forward. So going to look at my first one, which is a guy who bought his first property, settled it in February 2020, pulled out 60 grand in equity from his first property in May 2020, and used that $60,000 in order to buy his second property. He just messaged me yesterday and said that he wanted to buy a third one because he's been able to save up a bit more of a deposit as well. Being able to understand how finance works. A lot of people always think it's about these deals that Nathan gets. I want to talk more about the financing of it, because there's a lot more that's involved at the back end when it comes to financing, and looking at how the structuring of it works, and making sure that you've got the right debt vehicle in order to get you from where you are today to where you want to be in the future. And obviously with this investor, he bought the property in February, was able to refinance it in May, pull out $60,000 and be able to purchase his second property. Going to move on to a second win that we had here at Zinger Finance. The second win was a client which has gone from having 6 properties last year to redefining their debt and repositioning their debt, getting the right vehicles in place, being able to reduce their expenses, so the cash flow aspect of the debt is really crucial, and being able to pull out equity in order to expand that portfolio. This client has been able to get up to 11 properties in the last 6 months, go from 6 to 11, just to show that you can still build those large property portfolios in any sort of market. Structuring the equity correctly is crucial, and making sure that the cash flow is balanced, because when the banks do the servicing of the debt, they don't just look at the aspect of, okay, this is how much debt you've got. Each bank's back-end policies are different to each other. What their cash out policy will be different from an equity perspective. Some banks don't allow you all the time to pull out equity. So it's important to make sure you've got the equity aspect of it right, making sure that you've got the interest rates, the best performance that you can get, making sure that the debt facility that you're setting up, the right product within the bank, is enabling you to be able to, get yourself to where you want to be on a debt front as well. Third investor, who's the third one? Yes, the third one is a person that bought their first property at the start of this year in March, bought 2 properties, was able to pull out equity within a week of settlement of the first property and buy their third property, and was able to buy their 4th property. So within 3 months, everyone's putting a mask on, everyone's getting fearful of what they're watching on the news, and here we've got investors which are financing their dreams and being able to build large asset positions from structuring their debt correctly and purchasing the right assets. So on that front, one investor I spoke to earlier on this year, and was able to leapfrog into 4 properties very quickly. Overall debt position of this investor is just over $500,000. So if you're thinking about, wow, this person must have got into lots and lots of debt and all this sort of stuff, no, it doesn't take massive amounts of debt in order to build a property portfolio. So this investor has got 4 properties, 3 capital city assets, and 1 regional asset. The structuring of the asset is important, as is the debt that's secured attached to that. Moving on to my last and final investor that I want to talk about today. This investor's got a double-digit property portfolio, and was able to save $40,000 a year on interest by restructuring his debt. This guy's got a couple of $1 million or a few $1 million without going into too much details. It's in the $3 to $4 million category, and being able to refinance and restructure the debt, shaving off bits of interest rate reductions everywhere, means that that's an extra sort of 40 grand a year, which can be re-injected into paying down debt from a debt consolidation perspective. So making sure that you've got the right asset base there. The loan facilities now that have been set up for this investor has enabled him to be able to sell off some assets and retain that debt if he wishes to, be able to just save interest if he wishes to, be able to pay down more principal on the property if he wishes to. So the structuring is very, very important, right? The difference between saving 40 grand a year, could be 50 grand a year, could be 30 grand a year, could be 20 grand a year, could be 100 grand a year. That could be the big difference between getting from working 9 to 5 or to be able to quit your job during the GFD or the scamdemic, as I like to call it. So, what are you doing at this period in time? What have you done to your portfolio in the last 3 months to improve your position? Doesn't mean that you have to go buy property. How have you structured yourself in the last 3 months to improve your position? How have you structured yourself in the course of the last 6 months to improve your position? What reviews and advancements have you done in your portfolio in the last 12 months? I see so many investors, I speak to like 8 to 10 of them a day, looking at their portfolio, people saying, what should I do? And I'm like, what have you done? You've been sitting, you might have a good position, you might be able to live life on your terms, but without having any changes to your portfolio, you're just sitting there with assets that you've collected. You become a property collector. So, what can you do to improve your position? What would you like to do to your property portfolio to get you to where you want to be? And finally, how can we help you build your portfolio to where you want to be? Feel free to reach out to us, 1300 367 925. Email us at admin@beinvested.com.au or info@zingerfinance.com.au. Look forward to helping you. We'll catch up soon. Bye for now.